Good afternoon. Today is Thursday, the 6th of March, and this is Brian Shannon from AlphaTrends.net. The market's closed, and we had a pretty good sell-off here today as some important levels of support were broken, and it looks like this market is going to continue along the path of least resistance, and it shouldn't come as a surprise with a declining 50, 20, 10, 100, 200. You choose it. All the trends are down, and the path of least resistance is lower. A trend once established is more likely to continue than it is to reverse. And the people who've been trying to pick a bottom in this market are giving up some of their positions right now out of fear. And realistically, as I've been saying for months, that it's a trader's environment, that when you see these rallies in here, they're nothing more than short-term trading opportunities for very aggressive traders. So we've got the market back down. Let's take a look at the intraday action. Here in the 30-minute time frame, first of all, we'll start with that. And you can see that the spiders, earlier in the week we had broken that 132 level, and the market recovered from that up to the declining 5-day moving average, where we were expecting to see some selling pressure, and the market did in fact sell off from there. And then today we saw a lower low established once again. So the market just continues to send messages of a broken market, of a bear market. I see people, emailing me saying, well, it's not officially a bear market because it's not down 20% or whatever. I mean, an official bear market is when stocks are going down. That's, when most stocks are going down, then you're in a bear market. And clearly we're in a bear market. And even fundamentally, it's hard to find any good fundamental news out there, in the traditional S&P 500 companies and the NASDAQ 100, that sort of thing. And more importantly then, if there's good news or not, how is the news responded to? You might get a rally for a couple days, but when the selling comes back into the market, it tells you that that there's big problems in there. And the thing that I've been focusing on has been the lows from the Federal Reserve cut, which was basically the lows from January, and saying that take a look at the VWAP, the volume weighted average price. It's the average price that market has traded at since that level, and you can see that's also where we found resistance yesterday. So at that point, it basically said the sellers have control, they're holding on to control, they're defending their positions, and this is a bear market. You better get out because we're going lower. And a lot of people are confused when I say, I'd like to see a test of the lows. When I say a test of the lows, it doesn't by any means mean that I expect that that's going to be an eventual bottom when we, when and if we come down and touch this this level. And is it an intraday print? Is it closing print? It really isn't relevant to anything. If we're not trying to pick a bottom or find the exact turning point. A market bottom is a process, not an event, and it takes a while. If you look back to, in here when we had all this indecision, when the 200-day moving average starts turning back up, then you can have confidence in that it's time to buy. Right now, the 200-day moving average is turning lower, and the longer-term trend indicates that we've still got probably a lot of trouble ahead. If the market's correct two ways. One is through price. If we've seen, if the market comes down and that's the lows, it's not going to be safe to buy until this moving average comes down and flattens out, and that's going to take 6 to 12 months at a minimum. So enough of the longer term view, because that's not going to really help with the short term trading. But here we see that this, this low right here was taken out. Maybe we get a little, maybe this is just a flush out and it bounces higher, but the odds certainly don't favor it. We've got a declining 5-day moving average as well. As I said yesterday, this market's a mess. There's no reason to think that there's a turn coming. You look at what the market was looking for, for AMBAC to turn this market, and again, this stock is a disaster. It's got big problems, and this bailout package isn't really being responded to very well. Obviously, people are still shorting the stock, and basically anyone who's bought this stock, except for a couple people back in here, is in a losing position. Picking bottoms is a loser's game. If you want to buy a stock in an uptrend. This Capstone had another great day. I think this big volume might signal it's near the end of this little move here short term. So if you are in it, then tighten your stops up. But the XLF came down once again today, and this low right here is $24.11. Today it hit a low and closed right on that 24.14. Did it test the lows? Who cares, really? I mean, it's in a downtrend. It doesn't mean anything more than, so we're going to get some stops selling under there. But again, we already have established that the average participant in this market is losing money. They've been losing money since back here, and you can see that the average price that people have paid since the January lows for the XLSF is 27, and here it is at 24. So we're $3 lower than that, and that's what is that, 13%? So there's a lot of big losses in here. The people that say I'm buying financials because they're a value or whatever, you're gonna have plenty of time to buy these before it eventually turns higher. Let other people do the dirty work of finding the bottom. Once if bottom has firmly established itself, and at a minimum you have this 50-day moving average starting to flatten out, then you can start to maybe trust the process a little bit. But a declining 50-day moving average means guilty till proven innocent. If you're going to be a buyer in here, you do it on the very short-term time frames, and you got to be a very aggressive and disciplined trader, because odds favor further downside. And no one can pick the bottom, just as no one picked the exact turning point for the top of this market. This is where, in my mind, it officially broke down right in here. This is where the bear market began. But there have been some fantastic rallies in here. I mean, this rally back in January took this market from 24 up to 29 and a half. Huge rallies and great market for trading if you can handle the pressure of being that disciplined and being quick enough to move to the sidelines when the market turns back lower again. And this 5-day moving average has been a great place, as I've been pointing out for months. In the intermediate term, trade in the direction of the 5-day moving average. It's still indicating a downtrend. No reason to get involved. We see these short-term moving averages cross, and it says maybe it's finding support if it can break above resistance, which it didn't do for more than about 5 minutes. Then the problem is we're in a bearish market environment, and it just does not favor any support for rallies. So let's take a look now at the Russell 2000. The Russell 2000, the 68 level is gone basically now. There's it looked like it was trying to establish some support in here. It rallied back above. The market got oversold, rallied up a little, couldn't muster much of a rally. Found resistance near the declining 5-day moving average a couple days ago and broke back down, and now today we've got a lower low in here. I think it's inevitable that we test these intraday lows even, but when it does do that, again, it's not going to mean that it's a time to buy the market. It's a time to for aggressive traders to start looking at the 1-minute time frames for evidence of buying, but there is no evidence of that. We've got this, daily VWAP was declining all day long, and we had some real give up in here at the end of the day, which is good to see. Some fear into the markets, and there's always going to be bounces, but trust the direction of the trend. The trend is your friend, and it's up to you to decide which trend you're trading on. And even the longer term trends are clearly lower. So for people who are saying, I'm an investor, I'm in it for the long haul, long haul. I don't know why that word was so hard to say. But they're in it for the long term. You're kidding yourself. You're just blindly buying into a declining market. When the markets turn, you'll have plenty of time to get involved. Not at the exact bottom, but only liars get involved at the exact bottom. So don't focus on that. The NASDAQ 100 was down 95 cents, 2.2%. This market is really the weakest, and looking at this, the more times this support, you could make a case that this is. I don't want to get too involved in these patterns again, but you could say this is a descending triangle. If you take the height of that, it would indicate a move down towards $38 a share. So our symmetrical triangle turned into a descending triangle. The bottom line is, it's in a downtrend. It's below all the moving averages. All the moving averages are declining. The path of least resistance is clearly lower. When you look at the weekly time frame, there's nothing on here to indicate where that bottom elusive bottom may be found. If you take a look, the 2006 lows to where we are, we bounced at that 61.8% retracement level, and then failed to hold. So, lower highs and lower lows. The market has a lot of risk in it, and you've got to be an aggressive trader to be involved.